Welcome to FinBot Insights. This explainer deconstructs the investment thesis for Bitcoin reaching a price target of $170,000 by the end of 2025.
The central question for many investors this year revolves around Bitcoin's potential trajectory, following a period of strong gains and subsequent consolidation. This analysis presents a structured case for a target of $170,000, which represents a significant upside from its current trading level of approximately $113,000. This price target is not speculative, but is instead underpinned by a confluence of powerful, measurable market forces. Let's dive into the first pillar.
The primary driver of this bull market is an unprecedented wave of institutional capital, fundamentally altering Bitcoin's demand dynamics.
In a single month, Spot Bitcoin ETFs channeled billions of dollars into the asset, demonstrating the scale of this new, sustained buying pressure.
What is really interesting about this slide is how it visualizes the supply-demand imbalances. In just 3 days, ETFs absorbed an amount of Bitcoin equivalent to 7 weeks of new mining production.
This analyst projection provides a quantitative framework for understanding how continued inflows from institutions like BlackRock and Fidelity can mechanically drive the price higher. While institutional demand creates a powerful pull on prices, it is amplified by a pre-programmed and significant constraint on the supply side.
The Bitcoin halving is a crucial non-negotiable feature of the network that ensures its scarcity, and the full effects of the 2024 event are now materializing. And this brilliantly illustrates the core tension in the market. On one side, supply is programmatically tightening, while on the other, multiple sources of significant demand are accelerating.
Let's move to the broader economic environment and see how this builds upon the specific market dynamics of Bitcoin. The global money supply has reached a record high, which historically correlates with the price appreciation of scarce assets like Bitcoin, often sought as a hedge against inflation.
These three major macroeconomic developments in 2025 are creating a highly supportive environment for assets that exist outside the traditional fiat currency system.
The fundamental case is further supported by historical price patterns and technical indicators that suggest the current market is following a familiar path.
As this table shows, Bitcoin's long-term performance has substantially outpaced major benchmarks, reinforcing its role as a high-growth asset within a diversified portfolio.
Quantile models and analyses of gold fractals suggest that the current market structure is rhyming with history, projecting targets in the $150,000 to $180,000 range.
So, the crucial point is how to synthesize these pillars while remaining aware of the potential headwinds. A comprehensive thesis must also acknowledge risks. These factors could introduce volatility, though historical data suggests such events often present buying opportunities within a broader bull market.
Ultimately, this analysis serves as an intellectual framework, not financial advice, underscoring the necessity for individual due diligence.
This leaves us with a final thought. Given the structural shifts occurring, the path to $170,000 appears probable, raising the question of what may lie beyond.
Thank you for watching. If you found this breakdown valuable, please support the channel by clicking the like button and subscribing for more FinBot Insights.